Hey everyone, Jake here. Have you ever been interested in buying a stock, so you look it up, you see the price, you see the graph, and you think, guess that looks good? Well, I know I have in the past, but when you look at a stock, whether it's in your trading platform, Google Finance, Yahoo Finance, or wherever it may be, you're also presented with a lot of other numbers. Well, really understanding what all those other numbers are can actually help you reach a better conclusion on how good the stock is actually doing and whether it may be worth actually giving it a buy. Now, if you were actually interested in investing a large sum of money, you would likely want to look deeper into the finances for any given stock, but looking at these numbers is definitely a good place to start. Let's get into it. So in order to actually better look at these numbers, rather than me just spewing them out here, let's jump into the computer. Let's go. So let's start out by looking at Apple stock here. So when we're first looking at Apple stock within Google, obviously we can see that it is at $136.76. It looks like it went down as of February 5th. I'm recording this on Sunday, February 7th. So we can see it went down a little bit, but that's doesn't matter too much. If we look, here's the graph again that I was talking about. You can look over however many days, months, years, etc. That's all great, but this doesn't really tell you a whole lot. What can really tell you some more information is when you look at the numbers down here. So let's go over what these numbers mean. So first things first is open. This means what did the price open at for the given trading day. So this was on February. If it was like a weekday, this would be live, so it would show you what it opened at on that day. If we look at high, this is fairly simple. It's just what was the highest value of the stock throughout the day. So we can kind of probably go and see that here as well. Maybe it was at the very start. 135. I guess it reached at some point throughout the day, but I don't know exactly where that was. The low, also pretty simple, just the lowest point within the day. Looks like probably around here. I guess it reached it lower somewhere else, but can't see it on the graph, but I guess it's there. Cool, now we get into some more things that are not quite as obvious. So let's look at market cap. So market cap here is 2.3 T. T stands for trillion. So this is how much, if you added up all of the stocks, all of the Apple stocks that existed, and you multiplied them by the current price of the stock, so 136.76, you would get a total of $2.3 trillion. So if we just wanted to do this for fun, if we did 330,000,000 divided by 136, we would get, so there's about this many Apple stocks, just simply. Cool. So that's what this number is. Essentially, it's how much is the company worth from its stocks. Cool. So let's look at P/E ratio next. So P/E ratio is essentially the price divided by the earnings per share. So the price per share divided by the earnings per share. So a high P/E ratio, difficult to say, but a high P/E ratio is essentially would tell you that the stock is either overvalued or that investors think that the stock is going to go up in the near future. A low P/E ratio would mean that the company is either, or the stock is either undervalued or that people don't think it's going to go very well in the near future. Now, this is all great, but it is future thinking, but the P/E ratio is really only useful because sure, 36.97, that's cool. What does this mean, right? So what you can do is you can either compare the 36.97 to a past P/E ratio for a given stock to see, are people more hyped for it? Do people think it's going to go up more in the future, or has it come down? So again, if it comes down, that doesn't necessarily mean it's a bad thing. Like a low P/E ratio isn't a bad thing. What a low P/E ratio could actually mean, simply that they make more money than like their price of the share is closer to what their earnings are. Essentially, they're making more money than they're spending. So it could be a good thing. So another great way of looking at a P/E ratio is through competitors. So for instance, I'm going to look at two banks here. So I'm in Canada, so I'm going to look at TD stock, which is Toronto Dominion Bank. So this has a P/E ratio of 11.6. Okay, so that's a number that doesn't seem to mean a whole lot. Now let's look at RBC stock, which is Royal Bank of Canada. So this one has a 13.64. So this means that this stock is either overvalued or people think it's going to go up more than the TD stock. Let's next look at dividend yield. So dividend yield is shown as a percentage. This percentage is essentially the dividend you would receive over a year from owning the stock. Now, I've talked about dividends before, but essentially what a dividend is say you owned one of these $106.68 RBC stocks, and it has a dividend of $4 or 4.05%. So if we multiply the current price of this stock times 0.0405, we would get approximately $4.32 per year from owning a single RBC stock. Now, if you owned multiple of these, then you just multiply this number by however many you own. So this is a dividend, which is just, again, something that they pay back to you over the course of a year. It might be, they might pay it quarterly or biannually, so like once, like twice a year kind of thing. That doesn't mean that you're going to be paid 4.05% twice a year. It just means that it will be spread out throughout the year. But it's still a very good thing to look at, because dividends are essentially a form of passive income, which if you haven't watched my last video, give it, or I guess not just last video, but the one where I talk about passive income, it's definitely a good thing to look into. So previously closed is also fairly simple. It is what did it close at the day before, so the previous time. So this, again, we're looking at the February 5th. So the day before, so on the Thursday, it closed at 106.30. The 52-week high is essentially how high was it within the past year. So this was at 109.42 was its max, and its 52-week low was around $72. If we look at like a year-to-date, not year-to-date, sorry, 1 year, it was likely that low around here. Yeah, around March, given pandemic times. Cool. So this is a lot of the information we will actually get from Google. You can also click on the Finance tab here, and you can get a little bit more information. So like quarterly financials and other related markets that might be interesting. So quarterly financials are pretty useful. You can kind of see, how's the revenue doing. Obviously, you want to see green numbers here. If you click over to more financials, or just the financials tab here, you can kind of see a little bit more of a breakdown. So you can jump back further, so you can kind of compare it. So like obviously April, again, pandemic times, it went down, which is pretty expected. And then you can see also that like their cash on hand is growing significantly, which is also fairly good. So yeah, definitely good to look at here. You can also compare things here. So if I was trying to compare TD and RBC here, I can do that, and I can look at both of their stocks. I can look at both of their market caps, employees, their P/E ratios, again, which is pretty good, and then also look at their dividend yields. So yeah, this is definitely a good a good starter or a good intro into looking at and trying to compare two different stocks. So hopefully this video has helped you a little bit. Hopefully now when you're looking at a stock, you don't just look at the number and the graph. Look at some of those other values, and try and take them into consideration when you are trying to decide whether or not you're going to buy a stock or sell a stock. So yeah, hopefully this has been helpful. So one other thing I wanted to talk about within this video is, well, to put it simply, I am going to no longer be making finance related content on this YouTube channel. So I've been making personal finance videos for a little over 3 months now, and while that's not a long time, I've learned a lot about YouTube. I've also learned a lot about what I enjoy and what I don't enjoy through this whole process. So some of the things I enjoy are being creative, editing, and kind of just YouTube. I enjoy being able to put things out there. I've never made a YouTube video prior to having this channel, and while I've probably only have 2 subscribers that are not friends or family, it has still been a great experience. So this has nothing to do with views or anything. While I do enjoy finance, I think I enjoy finance more from a passive perspective. I like watching other people on YouTube talk about finance. I still like learning about finance and talking to friends about finance. But when it comes to doing research and creating content around finance, I just don't see it really being something that I could do long term. One of my fears when I started creating this channel was that if I suddenly got, it would be great, but if I got like 10,000 subscribers, I would hate if they were all more excited about a new video coming out from me than I was to make that video. I always want this whole process to be something that I can enjoy doing because I just do it in my spare time. I have a full-time job, so it needs to be something that I enjoy as much of the process as possible. So because of this, I have decided to pivot this channel into the tech and gaming scene on YouTube. I know those are some niches that don't have a lot of people out there, so I'm hoping to jump face first into that huge pool of millions of other creators who do content like that. But again, the point of this isn't to become famous or rich or anything like that from YouTube. It's just something that allows me to be creative and put new content out there. So I will probably not be posting for a couple of weeks while I try and get a good idea of how I want to arrange my new content. If you feel like you will not like that content, if you're just interested in finance, I hope you can stick around and see if you enjoy the new stuff, but if you don't, it was a pleasure having you, and yeah, I hope you have a good one. Cheers.